Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, बाजी ये 100% सही किया।
SBI is the banker to every Indian.
A workers' union has shot off a letter to the central government claiming that IT giant Infosys is using non-compete clause to prevent its employees from joining rival firms. While Infosys on its part said the clause does not deter employees from joining other firms. So what is behind this clause and why it may set wrong precedent? Watch our next report to know more.
Facing record levels of attrition, India's second largest software services firm Infosys is reportedly invoking the non-compete clause in the employment agreements to curb attrition. A Pune-based IT union, the nascent Information Technology Employees Senate, has written to the Union Labour Ministry seeking the removal of the clause, calling it arbitrary, unethical and illegal. While Infosys has had the clause for a long time, the union claimed that the company is now enforcing it and that it has received 65 to 70 complaints from employees. The non-compete clause bars employees from accepting offers from any of the named rival companies for a period of 6 months after leaving Infosys, if the new job involves working with a client with whom the employee had worked during the last 12 months of their stint with Infosys. For the said duration, the employee also cannot accept a job offer from any customer with whom they had worked in the 12 months immediately preceding the termination of their employment with Infosys. According to reports, Infosys has named 5 competitors including TCS, Accenture, IBM, Cognizant and Wipro for IT services employees, and 9 companies including Tech Mahindra, Genpact, WNS, TCS, Accenture, IBM, Cognizant, Wipro and HCL for business processing management staff. Non-compete clauses are not valid in India as per Section 27 of the Indian Contract Act, which states that any agreement that restrains anyone from practicing a lawful profession, trade or business is to that extent void. The courts have time and again trashed such clauses and held that post-termination non-compete clauses are not enforceable.
To retain the employees, they were trying to match with the package and the offer that employee is receiving, from the other organization. Though this was prevailing for the past 5 or 6 months, suddenly we came to know that Infosys is, pressurizing employees, and they are asking employees and they're showing the employees their offer letter, which includes this non-compete agreement. So the employees at the time of joining, they are in a hurry, they want to join as soon as possible. So at that time, it's you can say negligence from the employees' part also. So the company is now coming back to the employees in the HR discussions after the resignation. The employees who are on notice period right now. So the HR is trying to retain the employees on the basis of this non-compete agreement. We do understand and I do agree that this clause has been there for past few years, but we cannot call it ethical or legal because it violates the Constitution of India, right to livelihood. And apart from that, it also violates Section 27 of the Indian Contract Act. There is a strict policy of background verification in IT sector. So supposingly if he joins another competitor and in background verification, if it is told to Infosys that this employee is applying for the job and he has joined our organization, then there will be a negative comment on that part. We are receiving complaints from the employees who have already put down the papers, who are on notice period, because they are unable to retain the employees, so they have find out use this as a weapon.
Infosys on its part said that it is a standard business practice for employment contracts to include controls of reasonable scope and duration to protect the confidentiality of information, customer connection, and other legitimate business interests. It denied that the clause prevents employees from joining other organizations. The attrition rate at Infosys touched a record high of 27.7% in the March quarter on a last 12 months basis. In FY22, Infosys hired around 85,000 freshers and has planned a fresher intake of more than 50,000 in the current fiscal. As of March 31, Infosys had 3.14 lakh total employees, while TCS had 5.92 lakh people on its rolls. Most IT firms are jostling to hire employees and retain existing ones in a tight job market.
There is a rationale behind it. In several places, several companies, not just the IT sector, that people tend to include this. It's a deterrent primarily. From a company's perspective, what happens is when you hire someone, especially freshers, they train him, they spend some time, effort. The person 2 years later leaves, taking all of that valuable input, and it goes for a higher pay at some other place. And they can replace the person with a fresher when they're back to square one, or they have to go to a rival and get a person at a similar experience level at a higher cost. They have to avoid that. To deter people, they generally tend to put this. Although I have not seen a single situation where this has actually been enforced. So I'm not sure what kind of enforcement you're talking about. At best, you can probably write a legal notice to the person scaring him. Beyond that, if you go to court, it doesn't hold any good. But practically speaking, it's difficult and daunting just to think of fighting a case against a company like Infosys or any other big company for that matter. So best course of action is what they are doing right now is to unionize, to have a collective effort so that their expense, time and effort in fighting this is kept to a minimum. And they can all band together and see who else has been sent a notice or who else, and then seek remedy from the courts accordingly. Because that is the only way, and that is the best way for them to make this hassle-free. Because nobody wants to get into a long-drawn litigation, especially in relation to their profession and their work.
Employees have previously opposed the long 90-day notice period standard in India's IT industry. The invocation of the controversial non-compete clause, despite its legal validity being under question, can bring down employee morale, restrict the movement of labor between companies, and dent the growth prospects of employees. After all, there are only so many large employers in the IT services and BPM sectors, and most employees tend to switch between this limited set of companies.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In their bid to retain talent, top IT firms are also providing space for yoga and meditation to ensure mental well-being of employees. Prime Minister Narendra Modi, meanwhile, announced a set of measures this week to boost traditional medicine. The government is now introducing a special AYUSH visa category along with the marking system to give authenticity to quality AYUSH products. Our next report offers a peek into the $23 billion industry and tells about the challenges it faces.
Ever been to an Ayurvedic wellness center in Kerala? One of those tranquil resorts in a tropical setting? They offer treatments for everything, from depression to hair loss, in a way that they claim is holistic. The effectiveness of these healing processes is difficult to gauge, but if their popularity with foreign nationals is anything to go by, people do believe that they help. According to Kerala Tourism, nearly 35% of the foreign tourists who visit the state are repeat visitors seeking Ayurveda treatments. About 1.2 million international tourists visited Kerala in 2019. Clearly, there is an economic opportunity here, and the government wants to ensure that India can tap into it. Prime Minister Narendra Modi announced on Wednesday that special visas would be offered to those coming to India to undergo AYUSH treatments. He was inaugurating the Global AYUSH Investment and Innovation Summit in Gujarat. This decision is meant to boost medical tourism in traditional medicine. India's medical tourism sector in 2020 was estimated to be worth $5 to $6 billion. AYUSH visas could push that number up. Many of the factors that led to the success of medical tourism in India, from the quality of allied sectors such as hospitality to affordability, are likely to apply to medical tourism in traditional medicine too. The industry is also well placed to take advantage. According to a report by Research and Information System for Developing Countries, AYUSH has seen its market size grow by 17% between 2014 and 2020 to reach $18.1 billion. According to the report, the AYUSH industry was projected to reach $20.6 billion in 2021 and $23.3 billion in 2022.
The government of India is trying to make it easy for people to travel to India for getting Ayurvedic treatments. So that's why there is this issuing this special visa, and I'm sure this is going to have a lot of impact on the Ayurvedic business, especially in the medical value travel business. And I would say that now they're expecting that by 2026, it will be 13 billion. But I think if the AYUSH visa is issued, because so many people want to come for Ayurvedic treatment, so I'm sure this number is going to be much higher than what we are expecting.
Special visas weren't the only measures announced either. Prime Minister Modi also said that the government would soon launch an AYUSH mark for standardization and authentication of quality AYUSH products in the global market. As part of the initiative, farmers will be connected to better managed supply chains for medicinal plants, and technology will be used to vet these products before being given the standardization mark. At least till 2019, according to the Ministry of Commerce and Industry, India's share in the global export of herbs and herbal products was low. At that time, the total world herbal trade was assessed to be at $120 billion. When the ministry refers to herbs and herbal products, AYUSH products are also included. Back then, the ministry had also listed the reasons for this low share. These were inadequate agricultural practices, inadequate quality control, lack of large-scale organic cultivation, lack of processing and R&D, lack of standardization in products, processes and services, and lack of regulatory framework in trade of medicinal plants. The AYUSH mark should go some distance in addressing these issues.
Starting from procuring the herbs, there is strict standards for that to check the quality of the herbs, and of course the active ingredients that are positive in the herbs. For example, if you want to procure ashwagandha, which is very popular now, so there is standards for that this much ethanol should be in the herb. So that is one thing. And then second is the manufacturing process and all those which includes storage and processing, and then packaging and all the shelf life things, all those related standards. Those have to be, they're already doing this work, and it's almost in that final stage now. And I'm sure that this is going to give that AYUSH mark. Any company who is following all these standards will get an AYUSH mark.
However, there is also a serious challenge that India will have to overcome before it can become a global hub for traditional healing.
Ever since the AYUSH ministry was founded around 7 years ago, so this was the responsibility of the ministry to create regulations and standards and regulatory bodies, and this has been implemented very strictly now. There are state councils, there are state AYUSH departments which are strictly making sure that all these regulations are followed by the Ayurvedic practitioners or the other AYUSH practitioners. And of course, in addition to that, there's a lot of other regulations which have come in force to make sure that at the end of the day that this system gets recognized by the people and their narrative changes.
Success will depend on ensuring that traditional Indian medicine meets global standards. This is vital since such systems have often come to be associated with frauds. So, a major question remains. Will India be able to establish the credibility of these traditional systems by reducing rampant quackery?
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the serene world of traditional healing, let us turn to bustling Dalal Street. Foreign portfolio investors or FPIs have sold equities worth nearly 1.58 trillion rupees since October 2021. Recent market activity, however, shows that even domestic institutional investors and retail investors have slowed down their trading activity. Does this mean darker days ahead for the Indian stock markets? Let us find out.
Indian equity markets have been at the mercy of foreign portfolio investors for over 6 months now. Since October 2021, FPIs have sold equities worth nearly 1.58 trillion rupees as rising crude oil prices and steep valuation of the markets made them nervous. Of this, peak selling was witnessed in March 2022 when FPIs sold equities worth 41,123 crore rupees. According to analysts at Jefferies, India's positioning has come down to neutral or slight overweight level over the last 3 to 6 months, implying 50 to 100 BPS weight reduction. While valuations have come off from peak, they still remain the key discomfort. VK Vijay Kumar of Geojit Financial Services says that along with relative rich valuations, FPIs think markets have not priced in Fed's monetary tightening.
Valuations in India are not cheap. Nifty is now trading at about 19 times FY23 earnings. The premium to emerging market benchmark is also higher than historical averages. In this context of high valuations, foreign portfolio investors think that the market has not priced in the expected steep monetary tightening by the Fed. In India too, RBI may take 3 or even 4 rate hikes this year and switch to a neutral monetary stance.
That said, a recent trend has emerged in the markets, which is slowdown in the buying momentum of domestic institutional and retail investors. Data compiled by BS Research Bureau shows that DIIs bought equities worth 4,471 crore rupees in October last year. This buying increased to little over 42,000 crore rupees in February this year. However, so far in April, DIIs have bought equities worth 11,000 crore rupees only. So, is this a worrying sign for the markets?
Because a large part of the retail flows is still the SIP book, which is more than a 10,000 crore book per month, which happens, right? You may, at times, you do see an year-end phenomena during March, where people, where there is additionally flows move into CASA and bank fixed deposits and things like that. But otherwise, we don't see a larger trend playing out. The other part is that recently, of course, we've seen a significant run-up in the commodity prices which are there. So in these type of, during these type of time, you do see a larger allocation which happens to commodity markets rather than service-driven markets which are there. And we're also coming out of large inflows which had come into this place. So a lot of the selling which you're seeing is across many emerging markets except some of the commodity markets.
But will these trends continue?
What we are seeing is that at higher levels, there is some kind of profit booking from the foreign investors. On the other hand, we see that there is a lot of support from the domestic inflows. The SIPs itself are in the range of 11,000 to 12,000 crores every month. Apart from this, we do not see a lot of anxiety among the small investors. So we believe that the domestic inflows will keep helping the market. So overall, we see markets in a range over the next few months. Over the whole year 2022, we believe that it's going to be a stock pickers market.
From investment viewpoint, analysts at HSBC remain bullish on defensiveness, recovery plays with strong earnings outlook and industrials. Individually, they like ICICI Bank, Infosys, Bajaj Auto, Maruti, L&T, HUL, Apollo Hospitals and Sun Pharma. On Thursday, the BSE Sensex index ended at 57,912, up 874 points, while the Nifty 50 closed at 17,393, up 256 points. On Friday, markets will react to HCL Tech's Q4 numbers and await March quarter earnings of Hindustan Zinc, Tata Metaliks, and 12 other companies. Globally, developments around Ukraine-Russia war and rising COVID-19 cases will guide the sentiment.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
A prolonged conflict between Russia and Ukraine may further spook the FPIs who are already on the edge. Russia's war, meanwhile, is taking a turn for the worse. A host of Western sanctions has pushed it to the cusp of its first default on foreign debt since the Bolshevik Revolution over a century ago. Let us know more about it.
As the Russian invasion of Ukraine entered its 58th day, its effects on the world economy are now clearly visible. And after Ukraine, it's Russia which is bearing the maximum brunt. Not just its army, but the economy is bleeding too. So, why is one of the world's leading economies staring at an external debt default? And what will be its effects on its own economy? Due to the series of sanctions, about half of Russia's $640 billion of foreign currency reserves have been frozen. And it has drastically curtailed the country's ability to make bond repayments in the currency the debt was taken in, which is dollars. Meanwhile, Moody's Investors Service has warned that Russia's decision to make payments on debt, which was issued in dollars, in rubles would be considered a default. This is because it is in violation of the terms of the contract. How did things come to this? The Russian government's debt stands at a total value of $40 billion. This debt is mainly in dollars and euros, and foreign investors own half of it. The deadline to pay about $650 million in interest and principal to the holders of 2 bonds that had been issued in dollars passed on 4th April. Russia receives over $1 billion every day just from its oil and gas deliveries. However, it now has limited access to dollars due to the sanctions imposed by the US. Earlier, the US had allowed Russia to utilize some of the foreign reserves it had frozen to service debt payments. However, on 5th April, the US blocked Russia from using dollar reserves held at American banks to make debt payments. So, Russia has been left with little choice but to make the debt payments in rubles. Now, a 30-day grace period does allow Russia time until 4th May to avoid a default by converting the payments to dollars. So, what are the consequences of such a default? International investors will be unwilling or unable to lend more money to a country if it defaults on its foreign loan. They might also demand much higher interest rates. Basically, the country will either face higher interest costs or it will be unable to borrow further. Such a situation can force the country to reduce government spending, which in turn can lead to a fall in economic activity, an increase in unemployment, and a slowdown in economic growth.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Russia, meanwhile, has blamed the US and other Western countries for blocking payments to creditors and threatened legal action. That's all for today. We will be back with more news and analysis on the next episode. Stay tuned and thank you for watching. If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.